Last period we have seen retiring of the bill, the journal entry in the books of journal entries in the books of drawer and in the books of drawing. Okay, so now we will do the problem related to retiring of bill. Okay, so first, Sharath sold goods to Basil at for rupees 5,000, 10% TD. So after deducting trade discount, we have to write the amount. That discount, no entry for discount. And on the same day, drew a bill on Basil for the amount due payable after 3 months. 3 months is the period. Basil accepted the bill on 4th September. So 3 month bill, July, August, September. September, Basil retires his acceptance. Okay. August, September, October. October is the due date. October is the due date. Okay. So, but September. So 1 month before he retired his acceptance. So 1 month rebate we have to calculate. Receiving a rebate of 15% per annum, past journals in the books of both the parties. Okay. Sharath, Basil. Clear? Point. Okay. Sold goods, drew bill, 3 month. Basil accepted on 4th September. Basil retires his acceptance. Retires his acceptance means he made the payment. So you write journal entries in the books of Sharath. In the books of Sharath. First July 2013. So Sharath sold goods to Basil. Sharath sold goods to Basil. So first entry, Tomlin, first entry. In the books of Sharath.
Basil account debted to sales.
Yes, Basil account to sales. Being sold goods to Basil. Drew a bill. Second entry, Aditya. Second journal entry.
Bills receivable account debtor to Basil.
Yes, bills receivable account debtor to Basil. Bills, you can write amount 4,000. How 4,000? 5,000 is the amount of the bill. So 20% TD. So 5,000, 20%. 500. So 1,000. Okay. So 5,000 minus 1,000. 4,000. Clear? 5,000 minus TD. 1,000. So bills receivable account to Basil being acceptance received. 4,000. Okay. Next, on 4th September, 4/9/2013, Droy retired his acceptance. Aparna Jalendri.
Sir, bank.
So entry will be?
It's a bank account debtor, rebate account debtor to bills receivable account.
Yes, bank account debtor, rebate account debtor to bills receivable account. Being amount received, and rebate allowed, allowed. So, how to calculate rebate? 4,000 into 15% into, so receive date to mature date. So, 1st July is the date. So 3 months, 8, 9, 10. 9 we received. 1 month before we received the amount. 1 month before we received the amount. So 1 month discount we have to give. So 4,600 divided by 12. 50. So 50 is the discount. 50 is the discount. Okay? Over. Journal entries in the books of Sharath is over. Any doubt? So how to calculate discount means how many months before we got the amount? That date to mature date. Receiving date to mature date. How many months? Next, journal entries in the books of Basil. Journal entries in the books of Basil. So their sales, so here purchase, same date, 1/7/2013. Purchase account debtor to Sharath account, being purchased goods from Sharath. Same amount. Next, here bills receivable, here bills payable. Sharath account debtor to bills payable, being acceptance given, being acceptance given. Being acceptance given. Now, 4th 9, retiring of bill. Karthik generally in the books of drawing.
Sir, bills payable account,
Yes. Bills
debtor
payable
to
account debtor
bank
to
to
bank.
rebate.
Yes. To bank account to rebate account. Already we calculated. Sorry. Rebate amount 50. Rebate we given 3,950. the bank. Total 4,000. So to 4,000 for 3,050 through cash we got rebate. Draw got a rebate 50, being amount paid and rebate received. Rebate received. Rebate received. Being amount paid and rebate received. Now next question. Sonal accepts a bill drawn by Aman at 3 months dated 1st January. Here not Kumar, that is which one? Sonal only. Sonal retires the bill on 4th March and it is allowed a rebate of 12%. Okay? Not Kumar, that is Sonal. Sonal retires the bill on 4th March and is allowed 12% rebate. Okay? Past journal entries in the books of drawer and drawing. So it is simple. First, journal entries in the books of Aman. Here Aman is the drawer. Because who accepts the bill? Sonal accepts a bill drawn by Aman. So we'll start. 1st January 2014. So it is first starting with the bill only. So if it is owed to drawn by accepts, if it is the starting point, no need of first entry. But if you prepare any account, drawing account, in this case, if you write, then only your account will be correct. Ledger account will be correct. Otherwise, only journal entry means you can start with the bills receivable. Clear? Here journal entries in the books of drawer and drawee only. But if we prepare any account, so in that case, first we have to. We are receiving the bill from a Sonal. Why? How? Because already we had a transaction. If a past journal entries means, we can start with the bills receivable. Suppose prepare Sonal account in the books of Aman means, first you have to write Sonal account to sales. Okay, so we'll start. So here journal entry only. Second one, bills receivable account debtor to Sonal, being acceptance received, being acceptance received, being acceptance received. Amount it is given 4,000. Next, when he retired, Sonal retired the bill on 4th March. So 4th March retired. So bank account debtor, rebate account debtor, bank account debtor, rebate account debtor to bills receivable account. Being amount received, and rebate allowed. Being amount received and rebate allowed. So here you have to remember due date 3 months is the due date. So 2, 3, 4. So April you have to get, March we got the amount. So 1 month before. So how to calculate 4,000 into percentage, 12 percentage. 12 percentage into 1 by 12. 40. 4,000 into 12 percentage into 1 by 12. So we will get 3,960 out of 4,000. Next, journal entries in the books of Sonal. Journal entries in the books of Sonal. So first January 2014. So bill is the starting. So here Aman account debtor to bills payable. Aman account to bills payable. Aman account debtor to bills payable account. Being acceptance given. Being acceptance given. Being acceptance given. Then 4th March, bill retired. So in the books of drawee, bills payable account debtor to bank account, to bank account, to rebate account. Being amount paid, and rebate received. $4,000 is the amount of the bill. He given 3,960. Then he got the discount 40. So now all the cases are over. So I will revise. Okay, so first case is retaining the bill till due date. So in that entry, in the books of drawer, Y accounted to sales, second entry, bills receivable accounted to Y, and at the time of maturity, cash or bank accounted to bills receivable. In the books of drawing, purchase accounted to X, second entry, X accounted to bills payable, third entry, bills payable account to cash. Next case we studied discounting the bill with the bank and cashing the bill before the date of maturity. The bank will charge discount from the drawer. So entry will be in the books of drawer. First two entries same. Third entry will be bank account debtor, discount accounted to bills receivable. In the books of drawing, for that no journal entry because it is discounted by the drawer. Next, third case, bill sent to the bank for collection. First two entries same. So for collecting amount from the drawing, so we are giving that bill. So entry will be first two entries same. Third entry will be bill sent for collection accounted to bill sent for collection accounted to bills receivable. Bill sent for collection account to bills receivable. Suppose if you are collecting that bill sent for collection, mature date entry will be which one different? Bank account to bill sent for collection, not a bank account to bills receivable. But discounting the bill at the time of maturity, no entry in the books of drawer because already we got the amount from the bank. If it is bill sent for collection, if it is honored, first bill sent for collection account to bills receivable. Next entry, bank account to bill sent for collection. Then in the books of drawing, no entry for bills sent for collection. Only maturity, same entry, bills payable account to cash. But if it is honored in the books of drawer, already I said, bank accounted to bills sent for collection. Next case, which one? Retiring of bill. Now we studied retiring of bill. So first two entries same, third entry will be bank account debtor, rebate accounted to bills receivable. Okay, payment of the bill before the maturity date. Okay, so normally at the time of maturity entry will be bank account to bills receivable. Here extra rebate will come, discount. Next in the books of drawing, what is the entry? Bills payable account to bank to rebate. That is retiring of bill. Next one, endorsement of bill. Endorsement of bill. First two entries same, third entry will be X endorsed to Z. Z accounted to bills receivable. Z accounted to bills receivable. Like a discounting, endorsement also in the at the time of maturity, no entry in the books of drawer because the amount will get to which one endorsee. Then in the books of drawing, no entry for endorsement. See, no entry for endorsement. Next, in the books of endorsee, Z, first entry he received a bill from X. Bills receivable account to X. At the time of maturity, cash accounted to bills receivable. Cash accounted to bills receivable. Next, we studied dishonor of a bill. Dishonor of a bill, first two, three entries same. Then fourth entry, dishonor. If it is dishonor, will be normally if you get the amount means cash accounted to bills receivable normally. So if it is dishonor means instead of cash, who is responsible? Y. Y accounted to bills receivable. If it is a normal. If it is a discount bill, Y accounted to bank. If it is bill sent for collection is dishonored, Y accounted to bill sent for collection. If it is endorsed bill is dishonored, Y accounted to endorsee. But if any noting charge is there, if it is a normal bill, Y account to bills receivable to cash, then bill sent for collection is dishonored and noting charge paid means Y account to bill sent for collection to cash. Otherwise, the same together, endorsed bill also, discount bill also, the cancelled bill plus noting charge together we will write. Okay, Y account to bank. 20,000 plus 100. Endorsed bill is dishonor, that amount plus noting charge will write. If it is a normal bill is dishonor means that Y account to bills receivable to cash. If it is a bill sent for collection, if it is bank is paying means to bill sent for collection to bank, otherwise to cash. Normally to cash. Next one, renewal of a bill. If any renewal means cancelling the old bill at the request of the drawing for the purpose of extension of credit and making a new bill, that is a renewal of a bill. If a renewal is there, first cancel the old bill, then part payment, then interest due, sometimes interest received, then last new bill. So first entry in the books of drawer, cancelling the old bill. Drawee account to on the base of the question, which is normal to bills receivable. Okay. The next interest he have to get. So drawee have to give drawee account to interest. If we got 1 minute part payment received, cash account to Y. Cash account to Y. First you have to dishonor entry. Next part payment, cash account to Y. Third entry, interest, Y account to interest. If you receive interest instead of Y, cash account to interest. Next, a new bill, normally bills receivable account to Y. In the books of drawee, opposite, first dishonor. Dishonor in the books of drawee, only one entry, bills payable account to drawer. Bills payable account to, suppose if we paid cash means bills payable account to cash. Instead of cash, cut cash, you write drawer. Bills payable account to drawer. If any noting charge is there, bills payable account enter, noting charge account to drawer. Second entry, part payment made. X account to cash. X account to cash. Then interest payable. Here payable, expense, loss, X interest account to X. If you paid interest account to instead of X, cash. Next, new bill. X accounted to bills payable. X accounted to bills payable. Next, we studied insolvency. Last, we studied insolvency of the acceptor. So, if any insolvency is there, first we have to cancel the old bill, dishonor. Then, part payment is received. First, dishonor, we know that if it is a normal bill, Y accounted to bills receivable. If it is a discount bill, Y account to bank. If a bill sent for collection is cancelled, Y account to bill sent for collection. If endorsed bill is cancelled, Y account to which one? Endorsee. Clear? Next entry, part payment is received. Bank account enter, bad debt. Bad debt account to drawee. So one thing you have to remember, the person at the time of maturity, person will come at the case of insolvency only. Otherwise, at the time of maturity, bank account to bills receivable. Return bill, bank account enter, rebate account to bills receivable. But if any insolvency is insolvent, so that type persons, bank account enter, rebate account to drawee. In the books of drawee, first cancel. We know that entry, bills payable account enter, noting charge account to drawer. Last entry, which one? Drawer account to. Drawer account to bank to deficiency. Okay. So these are the cases. So you have to study the journal entry. If you know the journal entry, then you can do any problem. So every case is over. Okay. So I completed this chapter. Okay.